Welcome back in your markets news. China and Hong Kong shares fell on Thursday as tech and AI-related stocks slipped. Tariff concerns prompted investors to adopt a more defensive stance. The Shanghai Composite Index was down 0.4% at close, and the Hang Seng Index weakened 0.6%, while Japan's Nikkei closed down 0.1%. Wall Street ended sharply lower on Thursday. Cool inflation data was overshadowed by fears that the escalating tariff war being waged by the U.S. could reignite inflation and tip the economy into recession. A broad sell-off sent all three major U.S. stock indices tumbling, with losses in tech and tech-related mega-cap shares dragging the Nasdaq down the most. The S&P 500 closed 1.4%, while the Nasdaq closed at 1.9% weaker, and the Nasdaq fell by 1.9 to 17,303. Back home in other markets, we saw that the price of gold is now currently trading at $2,998 after touching an all-time high of $3,000 an ounce a short while ago. And we will be speaking to a market commentator about this. And the price of petroleum at the moment is at $989 an ounce, while Brent crude oil is sitting at $70.46 an ounce. The all-share index is at this hour up 1.1% at 88,027. And another look at the currencies for the last hour of On Point. The rand to the US dollar is sitting at 18.21 and at 19.79 against the euro, and at 23.54 against the pound. Warwick Lucas, the private client portfolio manager at Vunani Securities, and no stranger to On Point, joins us now as our market commentator for the week. Welcome, Warwick. It's always a great pleasure speaking to you. Before we even get to what happened domestically, that gold price, we're seeing now firsthand the effects of this trade talks and trade wars as investors are now looking for safe havens. What do you make of it?
Well, I think, first of all, good afternoon to all the viewers. And I think what we're seeing coming together is actually a picture globally that all hangs together. We have a very tense trade standoff going on. Each side thinks that they're perfectly in the right. So the appetite for a fight is perfectly firm. And I think we are seeing a combination of some inflation fears, growth fears, and of course, recessionary fears coming off that. So gold kind of reflects both the fear of some potential inflation, as yet unknown, given the last CPI print in the US, but definitely growth fears. I mean, the one thing that is clear, the US is going to hard land now. No question about that.
Another price that shifted quite fast and sharply is the price of oil. By around lunchtime yesterday at around 12, it was still sitting at $69, and shortly thereafter it moved to $70 a barrel. What would this mean for the domestic market?
Right, so I think that gold really just it's a great growth indicator, by the way, that oil price. So the fall that we saw initially in the oil price, and I mean it's been falling hard over the year, was really suggestive of pessimism about growth, and particularly US growth, justifiably. The bounce we saw yesterday, I think, is more in relation to pessimism, in relation to, first of all, tariffing around Iran, and secondly, pessimism about the Ukraine-Russia war coming to an early end. So the implications, though, locally, I think right now we are over-recovering on the oil price. I think the current fixed price for petrol is approximately 90 cents lower. So I think we can, in the month ahead, look forward to a little bit of a cut, but we must remember before we get too cheerful about that, the rand is a risk-off currency. Ongoing risk could put pressure on the rand, so we can't count our chickens too soon. Maybe if we flip a coin, we can say 50 cents in the middle. At least it's something to look forward to. But this economy is also very, very slow, and it needs interventions to start triggering some growth very soon.
Yeah. Speaking of this economy, it's been quite a busy week with obviously focus firmly on the budget. There's also been some company results, notably the banks have also released some of their results. But won't you just wrap the week for us for this week?
Right, so the budget, unfortunately, might have been announced, but it's not voted on and it's not nailed down. In terms of the line items, there is virtually nothing changed, which in simple terms means that a lot of the budget required fiscal drag, or in other words, inflation, to do most of its heavy lifting. What was left, however, was the prospect of some VAT hikes, and of course there's some fighting about that. And let's be clear, I mean, our budget not only was going to be a struggle anyway, but the fact that the US has done away with PEPFAR means, which is the US President's aid HIV program, meant that there's another 10 billion rand to find there, because quite frankly, that program is a question of life and death. And then we have all the other line items. So our budget is finding a problem, the same problem that a family budget around a table does, and that is who contributes what, who needs what, and how do we divide it all up fairly and squarely. And the simple fact of the matter is that our budget has been way overspent continually over years. The debt has grown to some really tricky levels to keep it contained. And we really have shaken the tax tree out. There really is nothing more that we can get out of the tax pot. Every tax hike at this level actually results in less income. That's a problem.
It is indeed a problem. Warwick, let's wrap it up here for this week. I would have loved to throw forward to next week, but let's leave it here. We have run out of time. Thank you so much, Warwick Lucas. He is with Vunani Securities, and he was our market commentator for today.